Hello and welcome to another update video about gold. So here on the gold futures chart, we are starting the new week quite neutral, okay? Nothing unexpected happening at the moment. I guess, this week is going to be quite volatile, maybe rather in the second half of the week, as it's related. That volatility could be related to the Fed interest rate decision as well as the US election, which is going to come to an end this week. Or it's going to happen this week. Okay, so there might be some volatility. I think it is clear that gold started some kind of a pullback here after a local top in October. I'm labeling this pullback as an A wave, and we are currently tracking a possible B wave bounce. I think that's sort of what I left you with in the last update. We talked about, okay, we have a 5-wave move down now, which looks like an A wave within a larger wave 4 with standard support between 2,658 and 2,712 USD. And the idea is, this A wave could have actually bottomed. Maybe another low, but it looks quite, looks finished. Looks finished. So it's possible that the A wave bottomed. We might be in the B wave now, but I need to see a little bit more upside momentum to be confident this is the B wave. And then I added already in the last update here the standard resistance area to the chart. It's located between 2,771 USD and 2,795 USD. So I'd like to see the B wave stay actually below that. We just have to understand that sometimes B waves are quite aggressive. They can even overshoot, and especially in wave 4 structures, these B waves sometimes can be really aggressive. But there's no sign of an aggressive B wave at this stage. But I'd still like it to go a little bit higher. And from a micro structure point of view, ideally this is the A wave of the B wave. We get a B and a C. But this is now obviously not predictive at all. This is just showing you how it roughly could develop, this B wave. And then once we have a top in place for wave B, we can add a target for the C wave to the downside, which probably hasn't started yet. And we can then be a little bit more precise about where that wave 4 could end, because all we have at the moment is a first decline, which, as I said, looks a bit like a 5-wave move. Whenever we get a 5-wave move, it indicates another leg, at least another leg is coming. So 5 down, 3 up to correct the 5-wave move, and then another 5-wave move would come, and that would again form a larger 3-wave move, which is correcting the rally that happened before, which should then lead to another move to the upside. Now, obviously, the market alone will decide. If we break below 2,658, I have to assume we are already in a larger correction, but it would be a change in structure, right? So it's not the same wave degree anymore. It would be the larger degree wave 4. I would then have to assume that this larger degree wave 3, which in the preferred scenario I only expect after one more high, well, again, I would have to assume then this already topped. And then we have an alternative support area between 2,516 and 2,621. But at the moment, there is no sign that a substantial low has formed. So I'm still looking for lower in the very short term, because a 5-wave move happened, topped in October, and that just needs to be corrected now, which is likely happening through this wave 4. Yeah, that's the update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, then feel free to check out the S&P 500 and stock service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.